It's Monday, May 3rd. This is Street Live. I'm Katherine Ross, and I'm joined, as always, by Jim Cramer. Jim, what are you watching in the markets today? We are firmly in the green.
Well, look, I think that there's a lot of nonsense about the month of May, and a lot of just this kind of pseudo-analysis. The month of May is like a lot of other months, which is at the beginning of the month, you have a lot of contributions being made. We have all these articles these days which talk about how individuals have far more money in the market as a percentage of their net worth. I think a lot of that is because the market's going up. And when something goes up, it encourages more investing. Now, a lot of the initial investing was done when the market was down a lot. A lot of the younger people came in when it was down a lot, and I salute them. They made the good move. But, we have a lot of liquidity, but we also have a lot of companies doing well. And the companies that aren't doing well, their stocks go down, except for a couple of stocks that are semiconductor stocks that just go down anyway. But that's a mistake. And I can make a case for a lot of stocks just because how well they're doing. I have a lot of the companies on Mad Money, and I find myself thinking, well, there's a stock that's going to go higher, and they do. And it doesn't really matter. I mean, you could throw the dart at Pepsi, you could throw the dart at Google, you could throw the dart at UPS. But what's really going on is that a lot of these companies are doing quite well, and that's bringing out buyers.
So let's talk about the meme stocks, Jim, because we've talked a lot about Microvision and AMC. I want to kind of circle back to GameStop, which is trading around this 170-200 level for the past week and a half or so.
Yeah, well, I mean, that's these people, the Wall Street Bets people, and see what they're saying today. They're stuck on, I mean, it's really kind of amazing that they're just stuck on a couple of stocks. I mean, they don't really, I don't know if they want to make people money or they just feel like they want to attack people, but I don't see the sense in it. I think that if you're just going to constantly write about the same stocks over and over and over again, you better have something that makes you money, and I don't see any money being made on that site. Now, it may be entertaining to people, and maybe the attacks mean something, but when I look at what they're doing today, I mean, here it is. Daily discussion thread, lost SEC filing from Citadel. That makes you no money. Tired of brush battles. Some kids will make brushing the best part. I guess that maybe that's some sort of advertisement. I don't know. Then WSB analyzes some charts. Well, that's great. And it's a picture of a weather chart. That's very funny. Early redemption of senior notes doesn't tell us what stock. Oh, here we are. Finally, consideration my RH shares over to Fidelity to qualify for a YOLO GME post. Well, that's particularly worthless. And Nokia's potential to reach 10. I'm actually in agreement. I think Nokia had a very good quarter, but that's probably the only thing that is of any interest or help to people making money. So if you're going to go to that site, that's like to me, it's like going to the racing forum for just one track over and over again with the same horses over and over again, and some maiden claimers periodically. So it's particularly worthless as it's a time suck. And I prefer to watch our network and read the street in order to be able to learn things.
And one stock that maybe isn't as worthless.
No. What do you think of that?
What do I think of your stance on GameStop right now and where it is currently?
What do you think of the Wall Street Bets and the people who write that site? What's the point of it? Maybe you're younger than I am. I don't see it.
I think that right now we're in an awkward time with GameStop, which is why I think it's hanging on to this 170 level. We really haven't seen enough for there to be momentum to push the stock higher or bring the stock lower. So I think that's where these Wall Street Bets investors are kind of losing their momentum on why it should be kept as a hold or why they should be buying more at this time. We need to see Ryan Cohen kind of make more announcements. I want to see who's coming in next as a CEO, for example, Jim. I mean, until we hear about that, the current CEO's in until July. So if it's really going to be a turnaround story, there needs to be more headlines around it.
Right. But I mean, what do you think about the site as a valuable site?
I think you got to understand it gives you a pulse on conversations that we might not otherwise be having, right? Because personally, Jim, the conversations I'm having with a lot of people on Wall Street that are based in Wall Street firms, I'm not having as many in-person conversations with people who are interested in Wall Street Bets or on Wall Street Bets. So being able to hop into a Discord chat for me gives me more of a pulse on what they care about and why they're not buying Amazon and why they're still interested in GameStop.
Okay, that's very good. I just find the site particularly worthless, and no better than it's Pablum and Filler Up and YOLO. I mean, that's not a form of investing. It's not even gambling. I mean, it's like trying to figure out what numbers are going to come up in the lottery. It's just particularly valueless. But
well, and I think that you've got a point there.
GameStop is stuck. You're right. I mean, they raised the money. I am waiting very much for. I'm waiting very much for something to happen where at least we know that Ryan Cohen's got some game plan. I'm not seeing that yet. I'm just not seeing that.
And Jim, just to circle back really quickly to your point on Wall Street Bets, I think that as a Reddit site, you're not seeing as many maybe organic posts anymore from these smaller retail investors. You're kind of seeing more of the more popular posts being upvoted to the top of the page. So to me, actually hopping into the Discord chats is more helpful than scrolling through the Reddit posts, in my personal opinion.
I think that's right. That's a good point, and that's what I should be doing. Maybe that would really kind of help, right? I mean, that might be a better way to. That may be a better way. So let me take a look at that. I mean, if there's ones that you think are particularly good, you want to flag them. I'm absolutely open-minded. How's that? I'm open-minded to see what people say. But anyway, what I'm looking at beyond that, I mean, I think that what's happening is you've got a lot of people. And just, this market's really flying. I want to make sure that we do the right thing for action alerts. The market is really kind of debunking a lot of the trash, let's just say, so-called insights that people have. I mean, look, right now you've got a whole. Boy, that NLOC is such a bad damn stock. I hate it. Drives me mad. But you've got interest rates going down, and that flushes money into stocks. And when it flushes into stocks, there's also a lot of money that goes into just the S&P. If it goes in the S&P, then it goes and brings up the size of a lot of the big cap stocks, and that's kind of what's happening. And then there are individual stocks that people are taking some profits in. There's some profits in Amazon, but it's been such a great quarter. They like the algorithms say that if oil's up, you should buy cyclicals. So there's a lot of different strangely positive things. Like you wake up today in Walmart, which has been such a bad stock. It's finally up $2.30 for no particular reason. And we have to go find a reason, but there's really no reason. It's just the retailers are doing better.
Another Action Alerts Plus stock that I want to dig into really quickly, Jim, is Apple, because of the court battle that kicks off today between Apple and Epic Games. In case people don't know, Epic Games is behind Fortnite. Now, these two, Epic is accusing Apple of violating antitrust laws, but Wedbush's Dan Ives says that Apple will probably come out the victor here. So I'm wondering, Jim, do you think that it's even worth watching this court case? Could it shape Apple in the future?
It's very much worth watching. I know from my time at the street before it was sold to Maven, I was adamant that we should play ball with Apple, because if you play ball with Apple, even though they get a big percentage, you do better than if you don't. And I never thought Apple was a monopoly. You can always go do it yourself. I always felt it was a helpful store that takes a big percentage, as if you were making something for a store. And the store, let's say it's a non-virtual store and you make something and they've got brick and mortar and they have to pay their rent and they take their cut and then you get the rest. Perfectly reasonable. And I've always felt that the arguments against it didn't seem to, are disingenuous, because these companies don't need to be on Apple. Being on Apple is more of a privilege than they realize, but it's not something that's anti-competitive. It's just a privilege.
Let's talk about crypto, Jim, because I want to bring up Ethereum. We've been hyper focused on Bitcoin. You actually do own some Ethereum because you were bidding in an auction for a time non-fungible token back when we had those covers being auctioned off. I covered Ethereum in an interview that will be released later this week with Dan Roberts, who is the EIC of Decrypt. And Jim, he told me that he thinks that Ethereum is going to end up being the coin that we use to pay for things, and Bitcoin is going to be more of the saver.
I've had several instances where I know that I could buy something with Ethereum, nothing with Bitcoin. My Ethereum has gone up tremendously in value, and I'm not selling it. I sold a lot of Bitcoin because I had my eye on a place, and I think that one of the things that we talk about Warren Buffett, but when you can make a lot of money very quickly, you can sell what you've made and go buy things that are storeholds of value. And also keep some Bitcoin if you want to. I mean, I put the down payment on a place that I had been eyeing with the money that Pomp helped me make when Pomp and I talked when Bitcoin was around 12,000. I thought it was very compelling. I bought a lot of Bitcoin. Then it went up a great deal. Then I sold a lot of Bitcoin. I put the down payment on a very nice 130-acre estate in Pennsylvania. I could never have done that had I not bought Bitcoin. And I'm proud of that. And you could say, well, Jim, you're so lucky, or I hate you, or whatever you want to say. I don't really care. I'm just giving it as an instance that there is indeed a way that you can buy something and then sell something and then go buy something that a Warren Buffett might say, you know what, that was good. You don't have to stay in it. But that's, again, this kind of straw man that what's going to happen is you buy Bitcoin, it goes up, and then you lose everything. And what I'm saying is you buy Bitcoin. You take out what you can that makes it so you can buy something of a great storeholder value historically, and then you can let it run. But I think that the idea that somehow it was wrong to buy something that didn't appreciate it so dramatically is stupid. And it's not a lottery ticket. I mean, many people went along for the ride, and I think they should sell some and then do something else with it, and they can keep some running. I don't think that's attacking an orthodoxy. There's a lot of orthodoxies that I'm attacking today, but so what? I mean, I'm talking about something that gave me a place of tremendous enjoyment. I do not get enjoyment from living in Bitcoin, but I did get great enjoyment from buying this place, stocking the pond, fishing, enjoying my family together. And it was just something that I couldn't have done if it weren't for Bitcoin.
So using what we've just talked about in crypto and Bitcoin and Ethereum, and also our conversation from earlier on the younger investor, I want to use this as an opportunity to jump into your comments about Warren Buffett, Charlie Munger, and the younger investor. And I'm going to quote your Real Money column from this morning, Jim, because one line really stood out, and that is, "I also tire of the rich telling the less well-off to try to not beat the market." Now, explain, Jim.
Well, okay, so there's two theories about the market. There's the Warren Buffett, you can't beat the market. And then there's the Peter Lynch, one up on Wall Street, that if you open your eyes and see what you're doing and using a lot, and read the annual, find out whether the company's doing well, you can make a ton of money. And it comes off that I'm some sort of a smashing of the idols. What I'm doing is endorsing a second way of investing by one of the greatest investors of our lifetime, Peter Lynch. And Peter Lynch would say, what do you do? And most of the younger people I know, people I made great amount of money listening to, liked Apple, which Buffett got from kids, liked Amazon, liked Netflix, liked Facebook, liked Alphabet, didn't like Microsoft, but recognized they had to use it. It's almost a hammerhold, liked Adobe. I mean, these are all what I regard as being accessible. And to tell people that they can't make money is antithetical to a whole nother skein of thought from Peter Lynch, who says you can make money. And all I'm doing is endorsing the Peter Lynch school of investing. And Peter Lynch, if people read One Up on Wall Street, which is a fabulous book, they will see why it's not necessarily right to do what Warren Buffett does, from someone who made a lot of money for people, and from a firm that has made a lot of money for people. So I just don't care for their patronizing. See, I think it's entirely possible that you can have their view without denigrating those who have a different view. And it's done very passive aggressive. the passive aggressive way of Warren Buffett is in some ways worse than the vicious attacks that Munger gives you. Now, age gives you immunity, and of course, the amount of money they've made gives you immunity. But I think that it's important to point out that millions of people gotten invested, and not all of them are buying Apple calls. And I just think that you don't want to be a person who discourages people from investing. It's kind of like what I felt happened with this country with the vaccine, where I think that the CDC discouraged you to get vaccinated after what they did with J&J. I mean, it's just there's ways to do things that are more inclusive and that are less punitive. And I find that to listen to Warren Buffett this morning from the excellent interview with Becky Quick is to suggest that maybe they're just against change. And Robinhood came out with a very good statement, with a little bit too defensive about themselves. And I don't like that they pay for order flow. That's just what they do. That's where they make their money, with the payment for order flow. They're paid. But I think that it's very important to recognize that these younger people who've come in is really fantastic. And I don't understand why that they're so that Buffett just trashed them as if they were all just Yahoo call buyers. So I thought that was very unfortunate and frankly ill-advised.
Jim, you hit the nail on the head there, quite frankly. I mean, that's exactly, I was disappointed as well listening to it, not only as a financial journalist, but also as someone who, as you know, on this program, we've preached about the importance of financial literacy and investing literacy. And I felt that Warren Buffett, so many people look up to him that there's almost, to me, an expectation that there should be more of a welcoming. I mean, he came from just buying a stock and not getting lucky. He did his research, but over time was able to reinvest and make the name that he has today. And why not say that a younger investor can do just that? But investing styles have changed, and I feel like that also needs to be acknowledged.
Exactly right. And all new people, people of different color, different religion, people who are not just white males who had privilege, are privileged. I think it's great. And I actually don't understand why I'm the only one who's raising questions about these two gentlemen. Frankly, I think it's quite unfortunate because I exist to try to help those people be educated. And you could say, well, listen, that hasn't always been the case, whatever. I've done my best. You can't be perfect, but I tried my best and devoted, after I quit the hedge fund, certainly make a lot less money. I've just been trying very hard to make it so that people learn more financial literacy, as you say. And I think that Buffett would tell you there's no such thing, that you have to give up. I mean, he's made so many straw men. Like the straw men are, listen, you're too stupid. I'm going to call it the way Munger would. So you got to do it in an index fund. But then again, you shouldn't even open the account because you really don't know anything. But then again, you can open the account and it's not illegal, but it's not, I mean, it's all this convoluted stuff. I mean, just come out and say, look, I really encourage people to invest. I know some of you probably want to try your hand at stock picking. It's been hard. It's very hard, but you might be good at it. I was good at it, so I certainly think you should try. If it turns out that you're not, then why not just be an index fund? Why is my view that I just articulated a Yahoo wild ass view? And the answer is it isn't, and theirs is.
And we'll keep this conversation going as time goes on, Jim, because these younger investors are not going away. We've seen that, and I hope that they don't. I want them to stay in the market. But with that, Jim, I want to end the show asking you about earnings reports, because we did get a lot of the big names that financial media hits on last week, but this week is also a very big week for earnings reports. So what are you going to be watching?
Well, tonight's T-Mobile. I think it's very, very important because remember, you have AT&T doing much better, Verizon having sold this AOL, this Oath, Yahoo. I don't know what's going to happen with that, but I know Apollo can make a lot of money. Verizon certainly didn't do the right thing. But T-Mobile will be a sign that there's a 5G, and we want to see 5G. We just have to get some sense that the world isn't being shut down by the chip shortage. And I just keep hearing it and reading it. And I do think that, like T.J. Rogers said, the former CEO of Cypress, in an op-ed piece last week, the invisible hand will solve this. The capitalism will solve this. But I'd like to see from T-Mobile a sign that, look, don't worry, 5G is in shape. If that's the case, then Marvell, which has been particularly poorly acting since it reported, and maybe even AMD, which is just terribly acting, which is kind of unbelievable, frankly, will do better.
All right, with that, we're heading on over to our Action Alerts Plus daily rundown show over on actionalertsplus.com. Come join us over there. I'm Katherine Ross, and we'll see you tomorrow.